Hello everyone, good afternoon and welcome to Trading the US Open live here at the Live Trade Room. Now today is Wednesday the 24th of October. Sorry, just before I continue, that's marginally a bit better. So just before I begin then, if we could start as we always do with our risk warning, but just to give you a very brief introduction, we're professional traders, trade with live capital every day, so every decision we make you'll be able to see our entries, our exits, with complete transparency in our approach. And what we'll look to do is to identify some high probability trading opportunities during the US Open, where we look to execute the trades that we look to identify with a high degree of consistency in our approach. So hopefully that will rub off and you'll be able to understand why it is important for traders to operate in these markets with a high degree of consistency. But then also to be able to manage our trades with a high degree of discipline. And what we're talking about is protecting your capital. So making sure that you don't expose large amounts of your capital for the benefit of that trade. And you'll experience the whole sort of trading environment with us with one view, with one aim, and that's to book in consistent returns over the medium and longer term, and where we look to cut our losers short as quickly as possible and look to let those winners run when we get those opportunities. So without further ado, if we could draw your attention to our risk warning just before we begin. So please do familiarize yourself with the risk warning currently up on screen. And before we trade the markets, it's important that we do have a comprehensive understanding of the news flow. And for this, we are going to get up our Forex factory. And I suppose it's important to just have a basic understanding that we had relatively negative manufacturing and services PMI data out of the Eurozone this morning, starting with the French, German, and then European manufacturing and flash data, and as you can see, most of them are on the negative side. So that has added to the pressure on the Eurozone for the time being. It also blends in nicely with the US dollar strength story as well. So we are currently trading the euro dollar to the downside, and currently in some good profit on that trade. So we'll come back to that shortly. But in terms of the remainder of the afternoon, really, we've got two events. And the first one is the Bank of Canada, potentially due to increased interest rates from 1.5 to 1.75%. And we will have the press conference at 4:15, and this is all UK time. So do bear that in mind if you're trading any Canadian dollar related trades. But as you can see, not an awful lot to contend with on a news release basis. Now, of course, I do apologize if you've heard this every single time, but we've got some major geopolitical events ticking away in the background, impacting these markets on a regular basis. And what we mean by, so we're getting a really good extended move lower now again. Let's see if we get some follow through. Yes, we have. So almost some follow through on this. So we're getting a nice explosive move further to the downside. So so let me just have a look at this off screen. So okay, so we're getting a nice strong move further to the downside. So what we can do is we can certainly look at this as the next target to the downside of 1378. Now we do have our stop loss. We've broken even on this trade already, so then it's just a case of allowing it to just continue to move to the downside. And when we look at this on the daily time frame, really strong move. Not an awful lot to support price, but there's every potential we're going to squeeze lower from this level, but it does remain to be seen whether that's the case. So once we get a strong signal perhaps to get out of this trade, then we may look for a kind of another leg lower to the downside. Certainly no major reason to make any major decision just yet. This is the euro dollar. So let's see if we get another push to the downside. This is on the 15-minute time frame, so we're getting a little bit of a pullback as we speak. What we can do is there's no need to expose this much capital in the trade now. So we've currently got our stop loss up at this level. The only thing what we'd like to see first of all is, let's see if we we've now broken beneath this level down here, as you can see, and we're extending lower. So really what we want to see is an additional pullback and then the next extension lower, and then we can definitely look to book in profit at these lower levels. So we'll just leave it as it is for now. Sorry, let's go back to the big screen. Let's slide through these charts just because we've got a nice explosive move lower in the euro dollar, and we're currently just getting a little bit of a pullback off that level, but we do expect this market to continue lower. The pound dollar is very much in the same position, and see if we get a nice extended move lower. Nothing but air beneath these levels. So let's see if we get continuation further to the downside. Getting a nice little pullback off that low. So this is the level we would like to see that pullback. Just want to check a bit of a pullback as well on the pound yen. So we're looking for the pound yen to break through the 145.24. Didn't quite get that same sort of explosive move that we've just seen. So this could present us with an opportunity to get into this market probably 40 pips lower than the initial level that we were looking to get in at. There's a couple of potential levels at this level, but we're talking about in and around the 2900 level is effectively the level of support and resistance. So so we've had a strong sort of reaction off this low, sort of 1378. So I mean, we've had these long reactions off these previous lows as well, but eventually we get that rollover to the downside. So let's see if we get one more leg to the downside. So let's have a look at the other markets. The dollar yen is kind of pushing higher. We've been talking about patterns, and we had a really strong pullback off these levels to a strong level of support. And as you can see, we've had a selling trade followed by two bullish candlesticks. Then we get a bearish candlestick followed by two additional bullish candlesticks. Yesterday we saw a bearish, and now we're anticipating two more bullish candlesticks, and this market to slowly grind higher. And that's effectively kind of what we're seeing. So we're in this market as well to the upside on the daily time frame. We're seeing a break above, so we're seeing the strength really extend into the dollar. And so the dollar Swiss above the 99.78 level. We're seeing this price just extend to the upside. Dollar CAD, not really doing an awful lot, but we do have a major news event out in what is a couple of hours. So you know, probably better to just step back from the CAD really until that event if you're not already in a trade. We've had the potential for this market squeezing higher and rolling lower, so a little bit of indecision for the Aussie dollar. The New Zealand dollar is eventually kind of looking like it's going to roll over to the downside. It's just doing so reluctantly, and let's see if we get a close below the 65.40 level. We might see that market push lower. We're seeing the pound slightly stronger than the euro, which is kind of why we're in the euro dollar, but in hindsight the dollar was always going to be stronger than the euro. So so there was opportunities in both is basically what I'm saying. So we're still in the yen trade to the downside if we look at this on a daily time frame. There's still every scope to get some an additional move below the 145.30, so we'll allow this to give this the space to continue to push lower. It's got every opportunity that this market will push lower. What we're seeing as a bit of tailwind is the erratic, and we're really focusing on the 27.42 in the S&P 500. So I just want to make note of this low. And this is the level that this market is really struggling to close below. Very, very important. I want to draw your attention back to a similar level, which was the 25.90 level. Just a little bit. There we go. It's just somewhere in and around here. And as you can see, this market really struggled to close below that level as a similar kind of level to this, what we're seeing up here. And it really did struggle to fail to break below that 25.90 level. And we're just seeing similar price action here, and this is why, you know, trading, certainly the equities are a little bit of an unusual animal, certainly over the last few years, which this market has just kept defying gravity almost and continuing to drive higher. And then when you get these sell-offs, and you should, like, we would still look to sell below the 27.09 99 times out of 100. Absolutely, from a technical perspective, it's a no-brainer sell trade to the downside, and yet we keep getting these sort of explosive reversals starting to kick in. And that's the S&P 500. Sorry, excuse me. We're seeing that same bit of price action start to kick in once more. So it'll be interesting to see at 2:30, once this market opens, exactly where we stand for this market. Okay, so that is the S&P. So just finishing off the currencies, we do expect the pound yen, we're currently experiencing a bit of a pullback. We do expect it to continue lower. The euro yen is looking like it's going to squeeze below that 128.32 level. The gold market is actually pulling off these highs, so we're in a market that is grinding higher. There is higher lows as this market's pushing up, but we're currently experiencing a bit of a pullback to the downside. UK oil. If we look at this on a daily time frame, what we can see is a bit of a retracement off yesterday's selling. So there's likely to be a bit of a pullback on this market. So we can certainly look into it, but it is very choppy, and it's not an easy market to trade. I suppose we can identify these highs in here, which is a potential level of support. So if we do get into it, it'll be a short-lived, nice explosive move, perhaps booking profit at these highs, maybe if we get a breakout straight the way through. So this is one of these markets we would like to come back to us to any great extent. So so what we would like to see in a market like this, and I'll take that off, is the market making a low, attempting to push higher, failing to make a new low before we get that move right back to the upside. So let's see if this level holds, or if it sort of breaks through that level, then we might need to rethink the trade. So really what we want is for this market to perform in a way in which we're comfortable trading it. now it's looking like if we get a break above the 66.69, it would certainly give us a really pretty tight kind of entry. We'd be talking at probably a 10 or 12 pip stop loss, which is really tight and concise, probably too tight, but if you get this market breaking above this level from a level of support, you're certainly stacking the odds in your favor. It doesn't necessarily have to be a profitable trade, but you're stacking the odds in your favor. You're identifying this area and saying, right, well, we've pulled back to this area now. We do have a double top. Let's see if we get another push, a break above to perhaps the 67. So it is counter trend, but because we can keep this risk fairly small, it might still be worth looking at. So potential for this market to continue squeezing lower as things currently stand. So let's see if we get a little bit of an impulse. So let's see if we just get a little tick higher. See if we can buy the oil markets. So maybe it's not giving us that opportunity just yet. Pound market has had a really strong bounce off that low, so all it is currently is a pullback, and as a result we're seeing the pound yen kind of pull back accordingly. So let's see if we get that little move higher now in the US oil market. Another tick higher, and we're happy to get into this. So there we go. So we're in this market to the upside. So all we're doing is buying the pullback. So 62, 4 pip spread, so 58. So we've got a 17 pip stop loss in the oil market, really short, snappy, concise, and let's see if we get a break above the 66.86 and the potential for this market to continue to the upside. So hopefully we'll get some follow through in that. We're still in a sell trade, getting a bit of a structural failure to the upside, but it's still got to work quite hard to stop us out of this trade, and we still expect it to the downside. But as we look at the US equities, we might be running into a bit of a stalemate between now and the US Open. So we shall definitely see. So all this trade does is stack up for us from a technical perspective. Yesterday we had a really strong fundamental drive to the downside, and now today we're seeing a little bit of a retracement on yesterday's move, and that's what we're looking to trade. So we know what type of trade it is. It's kind of a capitalizing on a bit of profit taking on this move to the downside, and just seeing if we just get another explosive move up. We'll be looking to take profits probably at these higher levels, just above these daily highs. So let's see if we get that opportunity. And the area we've identified is roughly the 66, 65, in and around that level. And we're looking to see if we can get that next leg to the upside. So having quite a strong retracement now in the pound yen. We have had Theresa May really quizzed with her cabinet. There's a lot of upset and annoyance with the trade deal, I guess, with the EU. That's apparently 95% done. The Irish issue still weighs very, very heavy. Okay, so I'm just going to post here in YouTube. So do feel free to use the chat function, guys, if you'd like to say hello, or any questions or comments, or perhaps even trade ideas you're looking at. I'm happy to look into them for you if you kind of want our opinion on it. So hopefully we're getting a little bit of a move, but we do need to see if we can get a break of the 66.86 and see if we get a constructive break to the upside in this market. Hopefully we'll get a nice strong move to the upside in the oil, and we don't get a rollover back to the downside, which is obviously something that we'd be a little bit concerned about. But if we get a break above 66.86, that would bode really well for us in terms of a retracement trade. And by the way, this would only be a move prior to the crude oil inventories out today at 3:30 UK time. So we certainly wouldn't be looking to hold this type of trade for 2, 3, 4 hours. We'd like to see a little bit of a move, make some money on it, and get out of it if we possibly can. And as we look into this, if the crude oil inventories, and they do say with the crude oil inventories that it's very hard to establish a correlation, but I suppose what we've noticed more often than not is that if it's a negative number, it supports the price of oil, and if it's a positive number over the expectation, then it's likely to push the price of oil lower. So but we're only looking to see if we can capitalize on a kind of an explosive move to the upside. If so, we might book in profit, maybe even around at the $67 level, if we can capitalize on profit around that price. It's definitely slow moving to begin with, that's for sure. So okay, let's see how we get on with this trade. Okay, so we kind of need to see the US oil break above that 66.86, and it's very slow in doing so. And of course we want the euro dollar to take the next leg to the downside, and we'd like the pound yen to just roll over a little bit further to the downside if we possibly can. So let's see how we get on with those. Okay. Okay. So we're in this phase really where we kind of need to be a little bit patient really for the time being. I am conscious of the time. All we're currently doing is just experiencing a bit of a pullback in this market. These are minute time frames as well, so they're not the most interesting markets or candlesticks to focus on, but let's see if we've got this level in here, the 145.61, and we'd like to see this market just roll over to the downside now if that's the case, below the 145.50, and maybe we can start attacking the 145.30. So we're only sort of 20-25 pips above that level. So we want to start seeing structural failures to the upside. We want to see this level be broke. So that's the first port of call, break below the 145.52, then below the 145.50, and hopefully get some continuation lower. Don't really want this market breaking above, but we do have the 1400 just above it, so there's still plenty of scope to the downside, so no need to be too aggressive with these. Things can change very, very quickly, as we know. So we still want to try and keep the pound yen and the euro dollar. We don't have significant reason to kind of get rid of them. It's only kind of a 20 pip pullback really to the upside. So if we look at this, we're getting a pullback on a 15-minute time frame. Potentially kind of up to this area here. So this market can pull back even a little bit further. And it's still part and parcel of the general trend, which is to the downside. So we do anticipate these markets to continue to tick lower, perhaps below the 1378 level. So it's the next level lower that would become a bit of a concern to us. So if we sort of hit the 1403 and we start rolling back down to the 1390, something like that, and then we roll back above the 1400, then that would be much more of a concern, because that would be kind of a strong structural failure. But at the moment it's just a pullback off the lows, so no need to get sort of too excited about it really. You know, we'd still expect it to move lower from these levels. So the oil market is kind of struggling to break above that 1686 level. So okay, it looks like we're getting quite an aggressive turnaround now in the pound. Maybe off the back of these discussions and negotiations with the cabinet, maybe it is quite positive after all. So this is the problem with trading the pound. Yes, we anticipate the market to push lower, but any thoughts and concepts of a soft Brexit is going to support the British pound and push it higher, and anything negative is going to drive it lower. So it's just really having your finger on the pulse and looking to buy it off the back of positive sentiment and sell it off the back of negative sentiment, and that of course makes it extra difficult for traders. So I'm afraid we're forced into being a little bit more patient for the time being. We're in two risk-free trades. We're selling the euro dollar to the downside, and we're also selling the pound yen, but we've had a little bit of an uncomfortable pullback in that. We're not exposing any capital, so they are risk-free trades with the expectation for these levels to be broken. There's nothing but air beneath these levels, so unless something fundamental shifts and changes, we're quite happy to see if they can continue lower. And we've also got the crude oil market with a potential kind of reversal off these lows. So even the UK oil has had a strong bounce back off the 75.39. That was the level that we were concerned about. We've had a really strong pullback off that level. As you can see, there's kind of I mean, these markets are just looking like they're resenting pushing lower, even though the S&P is looking like it's interested in squeezing lower just a little bit more. So still happy to be in the US oil to the upside, but we'd obviously like this 66.86 level to be broke and see if we get that little push higher. We'll have to wait and see. It's quite erratic. The gold just sort of sitting at those highs, but not really doing an awful lot. Okay, so sorry guys, apologies Renko. You're right, the mute button was gone, so apologies for that. What I was just saying was we have a stop loss in the oil market. It's quite tight and it's quite concise, but if this market rolls over to the downside, this is not a market we want to be in below 66.62 anyway. So hopefully eventually we'll get that breakout above the 66.86 and this becomes a bit of a structural low, and then hopefully we can take some risk off the table pretty shortly. But first step is that we break above the 66.86. We almost had this market just sort of roll over to the downside. That's obviously what we're wanting to see happen. We don't really want to see the pound dollar breaking above 29.29. So don't mind the euro dollar just hanging around this sort of 1400 level. The longer it does, the more hesitation, the less likely it will be for the buyers to continue to have strong confidence that this market's pushing higher. So for all of those reasons, quite happy for this market to just hang around these prices, and hopefully it'll contribute to the next leg to the upside. So we need to see this market break above 66.86. If we get that, then hopefully we'll get a bit of a move higher. So let's see if we get that close above that level. So now it seems like we're just getting that little bit of a move higher. Okay, so now we're getting a nice strong move higher. Hopefully we'll get a close above that level. Okay, so just to share with you, I suppose the trade, which is a bit of a reversal off the back of this really strong selling candlestick, just retracing that. I think we could probably retrace it a little bit further. So what I'll be eager to do is to take risk off the table. We know there's going to be a pullback at some point, so maybe the next pullback we get, and then we extend this trade to the upside, could give us the opportunities we need. So what we would like to see is we've had a really strong pullback in the pound yen, and now we've extended lower. We're now pulling back, so we kind of want to see this market perhaps pull back to these levels and just roll over again. And if we get that move, then we're back in this market to the downside, which is where we want to be, with the momentum firmly behind us, pushing prices lower. So that's what we want to see happen. We don't want this market to break this high. If it does, we might not be in this market for that much longer. Quite happy for this market to continue to just be in this range here, and let's hope we get another leg lower. So we're only probably 24, 25 pips off this low, and we still, looking at the daily time frame, still expect it lower, and we'd want the pound dollar to sort of reverse off these levels as well. A break below this level, the 29.16, could give us a structural failure back to the downside. So we can have a look at this market, see if we can capitalize on the next move lower, and hope we don't just see a series of structural failures start entering the British pound. I don't think there's anything on the news front that could, unless it's sort of Brexit related. So this market is just very nicely bounced off the 6,700, and if we get a break above that level, we're very likely to, that level can become a level of support for us. So let's see if we get a little bit of an explosive move further to the upside in this market. So at the moment, just to give you the psychology, at the moment the 6,700 is becoming a strong barrier, getting a bit of selling coming in. Now we just need to be patient to see if we keep attacking it, you know, we're likely to get a break above it, and once we're above that, then we're likely to get a bit of an acceleration, and then this level to become a level of support. So if we do get a pullback, then that could work in our favor as well. Hopefully we'll get a break below the 145.52 in the pound yen, and see if we get an extension lower in that market. If we do get a break below the 129.16, it might be worthwhile seeing if we get even just a little move lower in the pound dollar. So I do apologize, guys, but we do need to switch across to the live trade room. We've got traders over there now, so I better switch across from this channel. Please do see the information just below this video on our YouTube channel. We're hopefully going to get a breakout at this level to the downside, maybe some follow through to the downside as well in the pound dollar. And we do want the oil market to break above the $67 level and see if we get a bit more of a retracement to the upside. So a few trades hopefully will continue to play out. Okay, guys, I do need to switch across, so please do see the information below. You're very welcome to join us. We're offering a 14-day free trial if you do want to join our professional traders live every day. We've got different live trade rooms for different purposes, and depending on your availability, and so hopefully you'll find it useful. And if you do decide to come on board, it's just $9.99 per calendar month. So we do hope you'll find it a valuable and rewarding experience at a very, very low cost. So hopefully that works for you. The details are below, so do click on that link and do feel free to join us. You'll get instant access. And also do give us thumbs up if you can, and subscribe to our channel if you've not already done so. And also through Facebook, Instagram, Twitter and LinkedIn, the details are there up on screen. So thank you very much for joining us. As always, do take care. Tomorrow now is Thursday, and unfortunately we don't have this session at 8 AM tomorrow morning, but we will be back again tomorrow afternoon at 1 PM UK time. So we're only available tomorrow morning for live trade room traders. So unfortunately not through our YouTube channel. So for those of you that would like to join us, please do click on the link. Thanks, Renko. We look forward to seeing you next time. So from everyone here, take care and we'll speak to you soon. Bye for now.